also with real estate investors, which I know is applicable to the majority of your audience, and I, myself included, we tend to think of inflation, consumer price inflation, as this blob, right?
Mm-hmm.
It's this monolith. And if we have inflation, that's good because our mortgage is nominal payments, hopefully a
It,
fixed rate,
it
and
gets cheaper to repay.
it gets cheaper to repay, but only if the rent is going up.
Mm-hmm.
We tend to look at all consumer price. So imagine this world, and I'm not saying this would happen, but imagine a world where everything went up.
Mm-hmm.
So the CPI went up by 10% per year, except rents.
Mm-hmm.
That doesn't allow you to pay back your loan in cheaper dollars
Right.
because you're not getting more rent. So it's again, it's
Well,
very.
well, if the mortgage, wait, what do you mean by that? Because if the mortgage payment is fixed and the rent is fixed, say the rent never increases. So you got $1,000 a month rent, you've got a, $600, well, we'll call it $700 with PITI, principal, interest, taxes, and insurance, $700 mortgage payment, you got $300 a month positive cash flow. Inflation is attacking the 300 a month because it's worth less and less, your positive cash flow. So that's bad. But it's reducing the value of the debt on the mortgage so that $700 payment, begins to feel like it's 600, then
But it,
500.
no, it doesn't feel that way because you're still making the same amount in rent in nominal terms. Now, if your income, your general income, let's say you have a job, that goes up at the same rate of inflation, then yeah, because at a certain point in time, you're going to be able to, let's just say, take it to an extreme, you could pay off your home mortgage with the same amount of dollars that it would take you to buy a loaf of bread. And if your income is keeping up with that, then it's going to get a lot less of a burden as far as your debt, right? But if your rent, if that's the only way that you can pay that mortgage, and if your rent doesn't go up in nominal terms with inflation, then you're paying it back with basically the same type of dollars.
And thankfully, there's never been a sustained time where rent hasn't gone up. I
Yeah,
mean,
and I'm
maybe,
not
there
saying
are
that
little
that's going to
blips. Yeah.
happen. Just
Yeah.
trust me, I'm not.
Yeah.
That's not a prediction. I'm
Yeah.
not saying
Right.
that's going to happen. I can't really even imagine a scenario where that would happen. But it just goes to show how nuanced the discussion is, and how you
Yeah.
have to think of it. It's not just black and white.
So I'm glad you raised that issue, George, and we'll get back to the slides on the screen here. We could talk for days on these topics because we both love it. But one of the questions people have asked is, well, as the unemployment rate increases and increases, of course the bailout checks are coming from Uncle Sam, but as we see this, the question is sort of this generic question. Jason, how will people be able to afford to pay their rent? And let's just assume that bailouts continue and the economy does not completely collapse, okay? And certainly some people keep their jobs. Unemployment rate is definitely increasing. There's no question about that. But what happens, and inflation is a good way to use it too. What happens in an inflationary environment is people just have to accept, sadly, that their standard of living is going to go down, down, down. And so we take, people sort of view it in this very simplistic fashion sometimes, and they think, okay, well, I've got this $1,000 a month rent on a $100,000 property I bought. It looks good today. But if that tenant can't afford to pay the rent, then what happens? Well, what happens is this: your $1,000 a month tenant moves down. They move to a cheaper place that they can
Or
afford
yeah,
ultimately, and they're now paying $800 a month rent, and
right,
you inherit a tenant that has moved down the socioeconomic ladder, that used to have a $1,500 a month house that was 500 square feet bigger than the house you're renting. Now they're living in your cheaper house in an inferior neighborhood, and they're paying 1,000.
right.
Okay, so the ladder is, people move up and down the socioeconomic ladder all the time. And the nice thing is, when you're in this kind of entry level bread and butter housing that you own, okay, as a real estate investor, you catch people moving down. Okay, in good times, yeah, you catch them moving up. You're the launch pad for them to become a first-time buyer. But in bad times, you're catching people moving down the ladder. Thoughts?
Yeah.
Yeah.
Yeah. I tend to look at it like a thermometer.
Hmm.
I don't know how they are today, but remember those old school thermometers that we
Yeah,
have outside?
Mercury, yeah.
Yeah, where it have like the red thing go up.
Hmm.
Well, if you can envision it where you've got 100 degrees at the top, maybe let's say 0 at the bottom,
Hmm.
and the red part of the thermometer is the economy.
Right.
So if as our housing or in a linear market is way down at like let's say 10 degrees. So although the economy is going from 90 degrees to 80 degrees to 70 degrees to 30 to 20, we still have demand because we're all the way down at 10 degrees and
Hmm.
it's still red. So wherever there's red on the thermometer, there's still demand for our type of housing. So
Hmm.
the economy has to just it has to go below 10 degrees, so to speak, before there's not
Hmm.
demand for the type of housing we like. I think that over the short term, it's very unlikely for that demand to be substantially affected, regardless of what happens. Well, I shouldn't say regardless, unless it gets just incredibly bad, like I can't even imagine. But to be fair, if we have a sustained type of downturn, depression, where this goes on for 2 or 3 years, then I think even we'll see a little pressure on, or maybe a lot of pressure on rents because I think people will change their behavioral patterns where they actually, instead of having to have their own space, they'll start, like here in South America, where you have multiple generations in the same house or cousins and relatives, and
Right.
they're all kind of
Absolutely.
sharing it. So the amount of demand goes down. As you know, really the only thing that affects demand or one of the major drivers of demand decreasing for rents is a decrease in population.
Right.
That's
Right.
in normal times, that's what
Yeah.
you have to worry about, i.e. Detroit.
Hmm.
And so,
Detroit is the poster child for disaster. I mean, that city has shrunken in size to less than half of what it used to be. And one of the things I premise everything on when I talk about real estate investing is you've got to have either stable or growing population.
right,
But that doesn't mean overall, that means in your market. And markets are pretty small. All real estate is local. And George, I want to, I hate to say these famous last words that any investor says. This time it's different. Okay. Those are dangerous words, historically speaking. Uh, but this time it is a little different. I do agree with you that people are going to start to roommate up as they did in the Great Recession. That definitely happened as people try to cut expenses. However, now we've had this push for people to work at home, okay?
right,
And that's almost in some ways going to create more housing demand
yeah,
because think of this example. You got two roommates living together, two single people, okay? They're living in a little two-bedroom place. Maybe they're younger. They're probably in tech type business jobs where they can work remotely, okay? And so the roommates say, okay, my employer told me I got to work at home now. So you know what? It's fine for a few weeks, but I really need a workspace. Okay, so the roommates both agree because they're now both working at home, tripping over each other, getting in fights all the time because they're seeing way too much of each other, and one of them agrees I got to go find my own place and move out and get two bedrooms or at least be able to work in a living room or one bedroom with a living room or something or a kitchen table I can work on, and the other says the same thing. So now you've doubled the demand for housing.
yeah,
Now I'm not saying everybody can afford this, but one thing I know for sure is commercial real estate is in for a much more severe beating. Carl Icahn is shorting commercial real estate. The retail apocalypse has been going on for years, but also office space. There's going to be a huge reduction in demand for office space. But residential, the home is still the center of the universe.